Hello CA Final students, this is your Mr. GST who actually makes GST a good and simple tax for you. In this video, we are going to quickly solve CA Final IDT Mock Test Paper 2 for Jan 2026 exams. And before that, just a small update for you is nothing but, as you all already might be knowing, otherwise if you are watching my video for the first time, already there are concept marathons uploaded for CA Final IDT, MCQ workout marathon is also uploaded, amendments video is there, Jan 26 RTP, mock test paper 1 video, all these are also already uploaded. So please make sure you are using those resources also, and let us now move on to MTP number 2. Right now, coming to this MCQs, in this first here few MCQs, 1 or 2 3, as you know, 30 marks MCQs. Okay, 3 MCQs they have given independent MCQs. So first let us solve that MCQs actually. So here if you see the first MCQ is regarding, so they are dealing with second-hand cars and they want to know the GST liability here. So Messrs. Bola and Associates sales and purchase used on second-hand cars registered under GST. Okay, current financial year affected the following intrastate transactions. Okay, they have purchased 4 cars, 1 2 3 4, purchase price they have given and sale price they have given. And Bola Associates purchased car 1 2 and 3 from unregistered person. That means if you see here on this, sir, they have not charged GST, no GST, no ITC. Okay, and because no GST and no ITC, obviously the GST will be on sale price minus purchase price only if it is positive. You know that. So here purchase price 5 lakh, sale price 2 lakh 50, sorry 7 lakh 50. So on 2 lakh 50,000 we will charge GST plus here 3 lakh purchase price, 2 lakh 75,000 sale price. That means 25,000 negative. So we will not take anything, we will ignore it. 6 lakh purchase price, 6 lakh 50,000 sale price. So we will charge GST on 50,000. Next, car 4, 8 lakhs and 9 lakh 50,000. Let us see. And this car 4, if you see, sir, it has purchased from registered person and 1 lakh 30,000 he charged GST. Accordingly, Bola and Associates availed ITC also on the same. Sir, when you purchase the second-hand car and you take ITC on that, then the normal valuation rules will come into picture. If ITC has not been availed, then the difference between sale price and purchase price, the positive one we will take. If it is negative, we will ignore it. You hope you remember that. So here normal valuation rules apply. So they are asking Bola and Associates not conservant about GST provisions, all this blah blah blah. Determine the GST liability assuming applicable rate is 18% and the amounts given above are exclusive of GST. Simple MCQ. So here on 9,50,000. Sir, you have to pay GST. That means total on 9 lakh 50 plus 50, 10 lakh and 12 lakh 50. So on 12 lakh 50,000 you should pay GST 18%. So if you see 12.5 lakh into 18%, it is 2 lakh 25,000. You have to pay GST, and already he has an ITC of 1 lakh 30,000. You remember that. So balance minus 1.3. Sir, he should pay 95,000 GST. That is what the answer. Okay, so 95,000 is the answer. Hope it is clear for you. Next, John and John Limited India imported consignment from USA. The value of consignment is 7 lakh 50. Duty payable is 1 lakh 50. Company filed bill of entry for home consumption, but the interesting point here is, sir, before inspection clearance for home consumption, the goods were damaged. Similar type of thing we have seen as a problem in the MTP1, I guess. Okay, just check. And on filing representation to Customs Department, proper officer refused the claim for abatement because goods are already unloaded. The proper officer is in agreement with the claim that value of goods has come down to 1,50,000 only. See, even though goods are after unloading, but before inspection, all these things, if the goods are damaged, you can claim the abatement. So, if on 7,50,000 value, 1,50,000 is the customs duty payable, means, see, on 7,50,000, 1,50,000 is nothing but 20%. So on 1,50,000, if you take 20%, 30,000 will be the customs duty payable. So if for 7,50,000, 1,50,000 is the tax payable. For 1,50,000, automatically 30,000 is the tax payable. So the value came down to 1,50,000 and the tax payable will be 30,000. That is the answer. Next, this is again an interesting question. Based on this, there is an adjustment. There is a problem in MTP1 also we have did. So this is all about, you have imported some goods by air. They have given one more time, certain goods are imported by air. Okay, good number of mistakes happening in MTPs, right? I mean in drafting the questions or this typos, all that, fine, no problem. The free on board value is 100 rupees, FOB value is 100, cost of transport, loading, unloading, handling charges up to the place of importation is 25 rupees. Now you understand, when you are importing the goods by air, this transportation charges, all these things cannot go more than 20% of FOB. FOB is 100 rupees, so 20% of FOB is 20 rupees. And once you take this, sir, in this you will take entire loading, unloading, handling charges, everything up to place of importation, you should take only 20 rupees, you cannot take 25 rupees. Okay, cost of insurance is 10 rupees. They want to know what will be the value of the imported goods. Here they give, sir, this is 25 rupees. No, we will not take 25 rupees. 25 rupees, no, wrong answer. 20 rupees we should take. But cost of insurance, because actuals are available 10 rupees, you cannot take this 1.125% all that. So this is also wrong answer. So obviously last option is left, that is the correct answer. Of course, it should be the correct answer. So 20 rupees you should take. And when you are taking, I repeat, 20% FOB when we are taking, sir, we should take it from the uh, factory gate of this particular exporter till our place of importation. Everything, transport from the factory to the exporting port, their loading, unloading, all these things, everything till the place of importation, whatever is happening, that entire cost should be 20% of FOB. So again, when you take the 20%, again you will not take this extra things, all that. So that is the main concept here. So cost of insurance given 10 rupees. So option D is the correct answer. Okay, this is D. Third MCQ. Now let us move on to case scenario number 1. Before going to case scenario, first we will see the questions actually correct. So when we are looking at the questions, first let us see the question here. What is the taxable value for the month of April in the hands of Dinesh Shinde? April is important here. Amount of TDS to be deducted under section 51 by the PSU. Similar type of MCQ we have discussed, I guess. Let us see. I mean, in any RTP or MTP. Next, what is the maximum amount of pre-deposit to be filed for filing the appeal before appellate authority? Super. What is the aggregate turnover for the financial year 24-25 under section 2 subsection 6 of CGST Act 17? Okay, aggregate turnover, all the sales we should take. What is the place of supply in respect of transaction with perfect wedding organization planner? Okay. Which of the following outward supplies provided by the ancient day are not subject to payment of tax under reverse charge mechanism? That means not RCM service. Generally, insurance agent, recovery agent, security, housekeeping, renting of. Let us see what the answer is. So these are the things. So 4, 5, 6, 7, 8, 9. How many MCQs? 4, 5, 6, 7, 8, 9. 6 MCQs are there in this particular case study. So we have understood what is required. So let us go with the question now. Case scenario. So the first case scenario, Dinesh Pandey registered in Karnataka. Okay, Dinesh Pandey individual, you should understand, and he is registered in Karnataka. And he has provided following transactions for the financial year 24-25. There is a question regarding what is the aggregate turnover for the financial year 24-25, if you remember, case study. Question number 7. What is the aggregate turnover for the financial year 24-25 under section 2 subsection 6? Understand, aggregate turnover means all outward supplies. So taxable supply we will take, exempt supply we will take, interest received on unsecured loan, this is also exempt supply. The interest income you will ignore only for the purpose of section 10, but it is an aggregate turnover. For the purpose of section 10 composition scheme only, you will ignore interest income, not for any other purpose. So this also should be added. Transfer of goods to resident of his brother, a well-known professional. His brother, who is a well-known professional, will not fall under the definition of family, because brothers, sisters, and parents and grandparents are related family only when they are wholly dependent on you. This fellow is a well-known professional, so not dependent on him, so not a family. So transfer of goods to him is not a supply at all. First of all, aggregate turnover means supply. First it should be supply. Sir, this is no consideration, no supply, you cannot call it as supply. So this is what the information. So 143.5 plus 2, 145.5 will be the answer here. So 145 lakh 50,000 is the answer here. Okay, now let us move on to the next one. During the month of April, Dinesh Shinde provided following outward supplies. Okay, taxable goods 4 lakh, insurance agent services to Raksha Insurance Company registered under GST. See, Dinesh is an individual and he is providing services to an insurance company, so obviously it comes under RCM. Okay, interest received for late payment from various customers. Customers are giving interest for late payment, so this will be added to the value of supply. Recovery agent services to Yash Siddhi Limited, a trader of goods. Recovery agent services, if you are providing to banking companies and non-banking financial institutions, all that, then only it is RCM. Here, because he is a trader of goods, no RCM, so generally taxable. Security and housekeeping services provided to Nani school up to higher secondary school, an unregistered person, annual day function held at Prayag Convention Center outside the school campus. Outside the school campus taxable. And security services. Sir, security services by any person who is other than body corporate to a person registered under GST only RCM will come. So here RCM will not come again, right? This is taxable in the hands of Dinesh only. Next, renting of motor vehicle designed to carry passengers provided to Hiranmai Limited, cost of the fuel included, GST rates 5%. That means, see here supplier is a non-body corporate, Dinesh, and recipient is Hiranmai Limited body corporate. So it is taxable under RCM. Okay. Received with reference to contract of 5 lakh, taxable supply of goods, that is important here, to public sector undertaking registered in Tamil Nadu. Taxable supplies was made in the state of Karnataka, but fine. So even though this is made in the state of Karnataka, the recipient is registered in Tamil Nadu. Obviously, this is interstate supply sale, taxable 1,50,000. And if you understand, sir, for this we have different questions. This fourth MCQ you should understand very carefully. They have asked taxable value of supply for the month of April in the hands of Dinesh. That is very, very important when you are going in the exam also. Please make sure you read the question carefully, because in the hands of Dinesh Shinde is very important here. Okay, so it is not entire taxable supplies he made. Of course, he made all the taxable supplies. In that, there are some RCM supplies also. So now, if you see two RCM cases are there, these two should not be considered. These two should not be considered for value of supply here, taxable value. Okay, so 4 lakh plus 10,000 plus 40,000 plus 50,000 plus 1,50,000, 6,50,000 is the answer here. If you see, the answer is 6,50,000. Okay, hope it is clear for you. Next, so the next one we'll see. Further on 20th April, he hired Shinzo, wedding planner of Japan, to plan and organize his son's wedding under composite contract of all events of marriage, pre-wedding program at Mumbai, marriage and reception at Paris. And as per section 13 subsection 5, sir, when the event is happening in more than one location, including taxable territory and non-taxable territory, sir, we will take the location of taxable territory. So Mumbai will be the place of supply for both the events. So here Mumbai for both the event is the answer. Okay, nice. Next, in addition to above, proper officer has issued order under CGST Act 10th April raising a demand of 33 lakhs. Here the interesting part is tax demand is 20 lakh, interest is 3 lakh, penalty is 10 lakhs in respect of an intrastate transaction. Okay, the above moments are related to CGST only. CGST only. This is important, my dear friends. CGST only. Now, sir, Dinesh Shinde admitted the tax demand of 5 lakhs and interest of 2 lakhs and disputed the remaining tax. Okay. Remaining tax, interest and demand, remaining tax and interest demand and entire penalty demanded. Okay. Dinesh Shinde wants to file an appeal before appellate authority. All amounts given above are exclusive of taxes. Now, if you see here, we have seen the question regarding pre-deposit under CGST only. Sir, first of all, how much pre-deposit you should make when you're going with the appellate authority? Appellate authority 10%, appellate tribunal 20%. You know that. Sir, first of all, he has admitted 5 lakhs and 2 lakhs. He should first deposit that. Okay, 7 lakhs he should deposit. Plus 10% of, the important thing is 10% of only disputed tax, not interest, penalty, all these things. Out of 20 lakhs, sir, this fellow has disputed only 15 lakhs. That means 5 lakhs he has paid and is disputing only 15 lakhs. 10% of 15 lakhs. That means 1.5 lakhs. So 7 lakh plus 1.5 lakh will be 8.5 lakh. So the answer is 8.5 lakh here. And I repeat, here they are asking only the pre-deposit with CGST. Okay. Next, aggregate turnover question we have answered. Mumbai we have answered. And sir, there are two more MCQs which we did not answer regarding TDS. TDS is 1,50,000 payment. On the payment, 2% will come interstate supply. So 1,50,000 into 2% IGST, 3,000 will be the answer. Next, guys, please be careful here in this place of supply question. Here what they did now, TDS concept. Here taxable supply of goods is what the concept. Otherwise, if it is regarding construction of road, etc., etc., you should see location of immobile property. That is, Karnataka will become the place of supply. Place of supply and location of supply both are Karnataka. Recipient is registered in Tamil Nadu. No TDS implication. Like this question can be twisted, so please be careful. Okay, it is regarding trader of goods. That means every wording what they are giving in the question is going to play a crucial role. Now the last one, and another point here is, sir, they are asking which are not subjected to RCM. It is not who are subjected to RCM, sir, which are not subjected to RCM. If you remember, insurance is subject to RCM, recovery agent and housekeeping services not subjected to. These are the things, correct? That means our answer is 2 and 3. Our answer is 2 and 3. So the option should be only 2 and 3. Option B. So be careful while answering these things. Okay, we are done with case scenario 1 and hence totally 9 MCQs. Let us move on to the next case scenario. So the second case scenario, as you know, first we'll go with the questions MCQs. First question is regarding what is the blocked credit actually for this fellow SRTPL. Next, GST payable through e-cash ledger for the month of July on the services supplied by it through MRLT Limited. Okay, ignore rule 86B is what important here. Next, amount of tax to be collected, also TCS. Ignore bifurcation CGST, SGST, all these things on taxable supplies made through it during that. But this is TCS by MRLT Limited. Okay, for month July, August, and September. Next, you should calculate place of supply. Next, time of supply. Next, what is the amount of penalty payable in respect of self-assessment tax liability for the month of October? Okay, they are asking only about the penalty. That is important. Fine. Now coming to the case study here. Sir, Shriram Travels Private Limited is established on 3rd April, Bangalore, Karnataka. That is important. So first of all, this is a company, Karnataka. Primary objective is to provide air-conditioned contract-based passenger transportation services, affordable rates. It is obtaining voluntary registration on 1st May. Regarding that, we don't have any that great relevance actually in the questions. If you see, 1st July, the company purchased motor vehicles, that is omnibus. This is important for us. Company purchased omnibus, that is important, and various seating capacities. See here, the main thing is they have purchased vehicles which are omnibus, and transportation of passengers by a company using omnibus, air conditioned contract carriage, all these things are taxable, and because it is into transportation business, obviously it can take ITC for the vehicles no matter what is the seating capacity. Okay, and they have given the details, purchase price and the GST rate, all that. Next, for July month, SRTPL is associating with MRLT Limited, which is again a e-commerce operator through which they are making the supplies. So this company has developed an application, all these things, and they are doing it. Okay, fine. And MRLT collects the consideration for services and remits the same to SRTPL. That is important because when the e-commerce operator is collecting consideration and remitting it to the supplier, then TCS will come into picture, because there is a question on TCS. You can understand it. After reading the commission, all this not relevant. Their commission, we need not worry. They have given few booking details for the month of July. These bookings are obtained by SRTPL on its own account, not through MRT Limited. So on its own account, not through MRT Limited. That is important for you. So they have given various tickets details. Okay, and they gave the order number, travel date, starting date, ending date, sorry, starting city and ending city, where the customer resides, what is the date of payment, status of customer. Okay, you remember there is something, time of supply, place of supply questions can be useful for this. And the important point here is, here they give certain customers are registered. They are registered in the state in which they reside actually. That is important. Next, in all the above cases, journey is a single day journey and invoice is also issued electronically on the date of travel immediately after completion of journey. That means date of travel itself, it's here what? Actual date of invoice. Next, because this is time of supply related question is also there, you should remember, sir, time of supply, that section 13 subsection 2 says time of supply for services provided. General rule, if the invoice is raised within 30 days from the date of completion of service, then the time of supply is actual date of invoice or date of payment, whichever is earlier. So in these cases, if you see, sir, this is earlier. In this two, if you see, this is earlier. In this two, if you see, this is earlier. This two, if you see, this is earlier. In this is earlier. For everything, these are the time of supply. So we have seen time of supply also here. Next, there is a place of supply also related question. If you see, sir, when the customer is registered, obviously where he is registered, that is place of supply. Because he is from Bangalore, he is registered in Bangalore. So this is place of supply. And in the second case is unregistered fellow. So unregistered embarking point. So Bangalore starting city. This is a place of supply. For next one, Hyderabad will be the place of supply because he is registered there. No matter where to where the journey is happening. Unregistered na starting point. Registered na where he is registered. Mumbai. Unregistered na where is the starting point. So these are the place of supply. Place of supply also we have calculated. Super. The details of passenger transportation services. Because we have discussed that, let us close the time of supply, place of supply questions. Place of supply, they have asked for specific numbers. CA 435, PH 534, GK 987. Here you be careful, there are two invoices with CA serial number. Okay, so here they are asking CA 435, PH 534, GK 987. CH 435, PH, GK, these are the things. For this, what is that we have to see? Place of supply or time of supply? We have to see place of supply for this. So for this, the place of supply will be, sir, Bangalore, Hyderabad, Hyderabad. So that is your option. Bangalore, Hyderabad and Hyderabad. So option A. Bangalore, Hyderabad, Hyderabad and Hyderabad. Hope it is clear for you. Okay. Next, time of supply. Let us see time of supply. Here CA 234 UVXE. CA 234 UVXE. That means they are talking about CA 234 UV and XE. For that we have to see time of supply. For everything, time of supply is date of payment only here. If you see 3rd July, 20th July, 23rd July, 3/20/23. 3/20/23. So this is the only option we have, 3/20/23. Okay, that is the time of supply also. Hope this is also clear for you. Option C, right? Okay. Next, let us continue the balance case study here. If you see the balance case study, the details of passenger transportation services supplied by it through MRT. So through MRT, understand here there are two things. Whatever the supplies are made here, e-commerce operator is not liable to pay GST. Please remember, because this is a company and operated through omnibus, there is an exception. So SRTPL only liable to pay GST. So MRLT Limited has to collect TCS. Okay. So they have given the value of supplies here, July, August, September, taxes also, value also. And they give some other information regarding self-assessed tax. But we have something regarding TCS question also. No. Now, whatever the supplies made through MRLT, sir, MRLT has to collect tax at source on 1 crore 30 lakhs, 1 crore 25 lakhs, on 1 crore 40 lakhs, 0.5% they have to collect, correct? So if you see TCS, they have asked ignore the bifurcation of taxes for July, August, September. So what is the answer? 0.5%, 0.5% means. So it is, if you see option A, if you calculate, because 1 crore 40 lakhs is there here. How I did now? Without calculator, 1 crore 40 lakhs. In that 0.5% means somewhere around 70,000, something like that figure will come. Here 1 crore 30 lakhs means 65,000 will come. This is the only option which has that 75,000 and 65,000. So just like that we can proceed. Fine. So that should be the answer. Next, okay, balance information. If you see, so for the month of October, self-assessed tax of CGST liability 90,000. They have assessed CGST liability 90,000 and failed to make the payment. However, department initiated penal proceedings for the recovery under section 74A penalty. 74A will come into picture for the failure to pay GST and issued show cause notice. And they have deposited along with interest all these things. See, in the question in MCQ, there is regarding penalty, there is a point. So they did not ask anything about interest, all that. So 74A subsection 5 talks about, sir, if there is non-fraudulent case, self-assessed tax not paid within 30 days. So 10% of tax or 10,000, whichever is higher. So 10,000 is higher. 10% of 90,000 is 9,000. 9,000 or 10,000, whichever is higher. So the answer should be 10,000. The answer should be 10,000 here. So option D. Okay. So that is what the point. Next, we are left out with, I think, one question or two questions. Sir. Two questions. One is amount of block rate on motor vehicles. Motor vehicles, they are eligible for ITC because they are into the business of passenger transportation. So option D. Next, amount of GST payable through e-cash ledger. Through e-cash ledger. on services supplied by it through MRLT Limited during the month of July, ignoring the provisions of 86B. So July month they have made a turnover of this, and even through it they are making it this through this, sir, uh, they are only liable to pay GST. So 9 lakh, 9 lakh, 4 lakh, 9 lakh, 9 lakh, 4 lakh. So the tax liability output tax is 9 lakh, 9 lakh, and IGST 4 lakh. And we should see ITC. ITC is nothing but here for them. If you see in this question, they clearly told all amounts are exclusive of taxes as the case may be. Booking is confirmed only after paying the total fare of the journey, and there is no other out. See, first of all, booking confirmed only after payment of journey. These points, and next here this date of single day journey invoice is issued electronically and date of travel immediately after completion of journey. These facts will help us in time of supply, place of supply concepts. Okay, so hope you have understood that. Next, no other inward and outward transactions in the relevant period. And if you see, subject to the other information, assume all ITC, all conditions are set. If you see here, they have purchased only motor vehicles. For that also they are eligible for ITC, and on that whatever the taxes they have paid, so on 10 lakh they have got 1.8 plus 1.8. Okay. Next, 12 lakh. 1.08, 1.08. They have got 14 lakh. 1.26 lakh, 1.26 lakh. 14 nines are suddenly I did not recollect. Now 18 15s or 15 18s. We can take 18 15s 1.8. 2.7. This, yes, 2.7 lakhs. Okay. So this is the ITC amount. So if you see, total IGST is 2 lakh 70,000 ITC. First your target is to make ITC IGST 0. Sir, it is just 2 lakh 70,000. 2 lakh 70,000 will become 0. And CGST SGST is how much? 1.8 plus 1.08 plus 1.26. So it is 4 lakh 14,000. One mistake what we have already see here, there are 4 vehicles, right? That is what purchase price per vehicle. That is very important, guys. Don't do mistake here, be careful. Yes, 4 vehicles. So 4 vehicles means I took wrong calculation, sorry here. So per vehicle you should get 90,000, 90,000, 9 fours are 36. So 3 lakh 60,000, 3 lakh 60,000. Yes, my calculation mistakes are purely in an urgency to finish the video early. Extremely sorry for that. Here I did correctly, but into 3 vehicles you have to get. Sir, 12 lakh into 9%, 1 lakh 8,000 into 3 vehicles, 3 lakh 24, 3 lakh 24,000. Next, same for 14 lakhs also. 14 nines are 126, and into 2 vehicles we have to take 126 into 2, 240, 252. Let me not take chances. 252. Okay, 2 lakh 52,000, 2 lakh 52,000. Okay, so if you see total ITC CGST SGST is 2 lakh 52,000, 3 lakh 24,000 plus 3 lakh 60,000. It is 9 lakh 36,000. Correct? So 9 lakh 36,000, 9 lakh 36,000 you have ITC, but here your liability itself is 9 lakh. So you set off this 9 lakh, 9 lakh, and this liability becomes 0, and here it will be still 1 lakh 30,000. But you have here still 36,000, 36,000 excess CGST SGST. You can use it for IGST. So 4 lakh minus 2 lakh 70,000 minus 36,000 minus 36,000. So it is 58,000 IGST payable, CGST SGST nil. Please excuse me for any calculation errors. So the answer is option B. Option B. Right. So these are the MCQs. Yes, we have finished all the MCQs. Yes. So we are done with the MCQs. Let us now move on to the descriptive part. Fine. Fine. Now coming to the descriptive part of the questions actually. So yes, for making it simple for you all these things, like to to discuss this in really quick time, I have just already analyzed it and kept it ready for you. And you know, in the first question, the net minimum GST payable question, you should know, sir, the question will be always net minimum GST payable in cash, and in that you should decode three steps. One is gross GST liability, two ITC, number three set off. So for gross GST liability, you have to decode the sales information, and for ITC, you have to decode the purchase information, and finally we'll go for the set off. Okay, so before that, we should understand who is the person. Here, Keshav individual, registered GST, and this data is regarding April month. That is what the key things which we have to take here, and value they have given excluding taxes. Okay, fine. Now here, I have already decoded the information. So, Keshav operating member, sorry, in mining and exploration services in reliable oil field, Bhavnagar, Gujarat. He has provided certain services to the joint venture at the site, same site, which he is also member. He believes that the consideration received from joint venture is cost recovery and not taxable. Please understand, when you are providing some services to the joint venture for which you are taking the consideration, see, as your contribution, you take something consideration there, all these things, or for some purchase or something what we made commonly, and for that you are receiving your share, all these things, fine. But here you are providing some services and taking money, so this is obviously a supply, and hence it is taxable also. So this is intrastate transaction, and I am decoding here the information itself. Intrastate transaction, yes, this is a sale, so automatically CGST and SGST should come into picture. I already told you in many videos, first question decode like this and write down with the pencil in the exam, so that for you, when you are solving the question, it will be literally easy for you. So please make sure you write this information in pencil in the exam while going with the question, and then erase with the eraser, so after the solution is over, so that when you're posting the figures in the required boxes, it will be easy for you, right? Fine. Next, also purchased machinery from Mumbai, Maharashtra, to render services to JV at reliable oil field. Just now we have understood the services are taxable. For that purpose, he has purchased the machinery. So here he is eligible for ITC. This is a purchase of goods. He is eligible for ITC, and he is purchasing it from Mumbai, Maharashtra. So it is an interstate one. IGST will come into picture. Fine. Next, he also obtained professional legal services from senior advocate Gujarat. This fellow is also from Gujarat. Senior advocate is also from Gujarat. So this is purchases and legal services. You know, RCM comes into picture. So ITC, RCM. Okay, that is what the point. Next, so because of purchases, you will get CGST, SGST, same state. Next, he was allotted an office on rent by state government. Again, he is purchasing the renting of immovable property, and that he can take ITC, and this is by state government, and this is RCM. Okay, and because this is again same state, CGST plus SGST will come into picture. He got a portion of petroleum silt non-taxable under GST as a part of compensation while exploring the petroleum reserves, which is as per the contract with government. Cost petroleum, as you know, cost petroleum is you are recovering, you are investing and recovering your cost. You did not make any supply there, you have not provided any services to anyone. For that, this is not the consideration. This is purely you have invested something and you have recovered your investment. There is no supply, no consideration. So this is not supply at all. So hope you remember this clarification with respect to cost petroleum and profit petroleum. Next, the sells petroleum silt, which is non-taxable under GST, to a SEZ developer in Bhavnagar, Gujarat. He has already filed LUT. And supply to SEZ is a zero rated supply. So this is zero rated, and of course no GST treatment also. So no GST, nothing, because he has also filed LUT. Next, consideration received in the nature of recovery of bond amount in case of 3 employees having leaving this employment before a minimum period. The compensation received as per employment contract services. So this is not a supply, schedule 3 transaction. Next, so no GST. Next, consideration received towards transfer of tenancy rights in Gujarat. Keshav, according to him, is not liable to pay GST because of stamp duty. We know that transfer of tenancy rights is supply of service, it is taxable. So Keshav's intention is wrong. So this is intrastate sale. Yes, CGST and SGST will come into picture. Okay. So now I am hiding unnecessary. So CGST, SGST will come into picture. Next. So next, if you see consideration received for mining license from mining license holders for renting of 5 dumpers, including a driver for transporting the minerals, minimum period of 2 years. This is intrastate transaction. They only give intrastate transaction. This is a sale. Consideration received means sale. So this is intrastate sale, right? So yes, CGST and SGST will come into picture again. You know this. Next has been assigned the mining rights from government and amount of IGST involved against royalty 3 lakhs. Understand, mining license received from government, again this is purchased from government and you can take ITC on that. IGST paid 3 lakhs, they have given the information. The only thing which we should also remember, this is RCM, simple. So additional information, nothing that great. Keshwara filed LUT, all these things for zero rated supply. The only thing is for goods take GST rate 5%, for services take GST 18% is what the point. And they have given opening balance of cash ledger as well as opening balance of credit ledger. Here you should be careful. This cash ledger is in SGST, credit ledger 15,000 in IGST, 5,000 in CGST, 9,000 in SGST. Okay, that is what the credit ledger balances. Okay, now as you know, sir, we have 3 steps in the answer. Step 1 is nothing but calculate gross GST liability. For calculating gross GST liability, for calculating gross GST liability, you should decode the sales information. As we have already decoded sales information here, and you understand here, sir, for services it is 9%, for goods it is 5%, services 9%. With that, we have also understood the GST rates. Now we have total 5 sales information here: 1, 2, 3, 4, 5, 6. Sorry. So for all that 6, we have discussed what is the tax treatment. So I have posted here this way. See, whenever you are posting like this in the format, okay, in the particulars column itself, you should write down your reasoning. It is supply, not a supply, exempt, taxable, RCM, FCM, all these reasonings you should write there itself. So I have explained all the reasonings for you. So I have posted properly. So supply, not a supply. Supply means I have also given below itself GST rates, and if it is not a supply, no GST implication, all that. So if you see according to this, sir, we have only 3 transactions which has tax implication. Okay, so one is this operating member services. Next one is that he has received consideration for transfer of tenancy rights. Next one is for mining license, they have renting the dumpers, all this. For that, he has got the consideration. 3 things. So if you see total GST liabilities, gross GST liability, CGST, SGST, 2,43,000, 2,43,000 each. Now, calculation of ITC is the second step. ITC also we have understood the opening balances. First we should take opening balances properly, correctly you post. Okay, correctly we have posted opening balances, and there are 4 purchases. In that 4 purchases, this 8 lakhs, sir, you can take 40,000 ITC. This 1,50,000, 13,500, 13,500. Next 2,50,000, and next 3 lakh on that royalty that we have taken. So total ITC you take 3,55,000 IGST, 86,000 CGST, 45,000 SGST. Here please be careful because here total CGST and here total SGST are different. So please be careful when you are doing the problem. Next, here the important thing is that there are some RCM purchases. No, sir. RCM purchases, what you do generally, sir, when there is an RCM purchase, you can take ITC. You are eligible for ITC for that, correct? First take ITC, do the problem, set off everything, and finally add the RCM liability. So we have not adjusted anything till now. So we'll go for the set off. When we are going for the set off, sir, we have understood output tax is IGST 0, CGST 2,43,000, SGST 2,43,000. Now your first agenda is to make IGST ITC 0. But IGST ITC I have sir 3,55,000. To make it 0, you can use it for 2,43,000. You can use it for 2,43,000, 2,40,000, CGST, SGST. In what proportion? Any proportion, any order, you know that. But here the problem is, sir, when you are going with any order, any proportion, you should make sure it is done in an efficient manner, so your net minimum GST payable in cash will be as less as possible. So what I'll do generally, I feel like 3,55,000 I have money here to help to CGST, SGST. So CGST, if you see, output tax is 2,43,000, input tax is 86,000. That means how much deficit is there for this? Sir, it has a deficit of, understand, it needs the help of 1,57,000. CGST needs help of 1,57,000 because liability is 2,43,000. ITC is nothing but, sir, 86,000. So it needs that 1,57,000 help. If you can do that, it will be very happy. Okay. Same logic if you apply, sir. SGST payable is 2,43,000, sir. ITC 45,000, sir. So if you see again how much help it needs, sir, it needs 1,98,000. If anybody can help it, 1,98,000, it will be very happy. So who is there ready to help here? IGST is there readily to help. IGST totally has 3,55,000, and these people need both of them 1,57,000 and 98. If you add 1,57,000 and 1,98,000 put together, it will come 3,55,000. That means exactly it is matching. IGST is having 3,55,000 to help. CGST, SGST both put together also need that much only. So from IGST ITC balance, first target is to make it zero. I will use 1,57,000 for CGST, 1,98,000 for SGST. This is the important adjustment here you have to do. Okay, fine. Now, balance how much is payable? Sir, balance payable now is 86,000 and 45,000. That much ITC already they are having in their own personal accounts. That much if you give, so the answer will be net GST payable in cash actually 000. But sir, we have RCM liability, no sir, that we have to add, no sir, finally. Yes, that RCM liability now you will add. Sir, now you have 3 purchases of RCM, sir. If you add that 3 purchases, sir, for cash payment, now this is the amount you should pay in cash actually. So you have to pay that in cash. How much amount? Sir, you have to pay 3,36,000, 36,000. This should be paid in cash. But in the question again they have given information, sir, there is e-cash ledger balance in SGST. Correct? How much? 34,000 already, sir. E-cash ledger balance SGST 34,000 already there. Now balance if you see, sir, now if you can upload in cash ledger 3 lakh in IGST, 36,000 in CGST, 2,000 in SGST, then automatically that will be sufficient, more than sufficient. That is what the concept. Hope it is clear. So the net minimum GST payable in cash is this. So simple, in 10 minutes we have finished this discussion. Actually speaking, somewhere 11.5 minutes. Okay. So that way, very easy if you are following this format, very easy. Okay, so that is what the point. Now let us move on to the next question, question number 2. So here next question number 2, if you see in that second question part A, see we have to identify Arpit, a registered fellow individual, and he is from Gujarat, and this information is regarding March. So you have to calculate everything regarding March here, and they have given details of various outward supplies. And if you see, they have given that amounts are exclusive of GST, all are intrastate, assuming taxes 18%, 9%, 9%, all that. From the above information, compute GST liability of each item separately on which tax to be paid by Mr. Arpit for the month of March. So, on what Arpit should pay tax, that we have to calculate. In this question, please understand there are some RCM transactions that we will just consider it is RCM, so on that he need not pay GST. Okay. So, what they are asking, compute the GST liability of each item separately. They are asking compute the GST liability for each item separately. Now, if you see, first of all, Shamji Vyapar Chamber of Commerce organized a business summit for that Fiyama Private Limited, who is manufacturing some ready-made garments, is acting as a sponsor. So providing sponsorship, all these things, and paid sponsorship is 1,80,000 to Shamji Vyapar Chamber of Commerce. Mr. Arpit, independent director of Fiyama Private Limited, provided the services to company in relation to this capacity of director, and Fiyama Private Limited paid 40,000 to him as a remuneration. Understand, generally students make it misunderstood or confused here. Here the question they give both the sponsorship and director related thing. Here they are asking about director services. They are telling you the story, the background, all these things. He is working in a company as a director. That company, what it is doing, so it is providing sponsorship for an event conducted by Shamji Vyapar. All these things not relevant for us. So he is providing his services as a director. When he is providing his services as a director, obviously what we should do? So obviously we should be like for director remuneration, what he is receiving, on that RCM will come into picture. So on this 40,000, RCM will come into picture. So no GST liability in the hands of Mr. Arpit. Okay, that is what we have to understand. Next, the next one is supply of railway equipment by way of transportation by vessel. Railway equipment vessel, one place in India to another place. So there is no specific exemption given here for this. So it is 1 second, please. So there is no specific exemption given here. So for this, so this is taxable. So this is also taxable. Sorry, 1,20,000. So this is taxable on 1,20,000. On 1,20,000, they should pay GST. Okay, that is what the point. Next, so all are intrastate transactions. So on 1,20,000, what we should do? We should see 9%, 9% GST you will charge. Okay. Next, services by way of warehouse storage or warehousing of processed tea. storage or warehousing of this agricultural produce is fine, but this is processed tea used for beverages as green tea, so it is not exempt. So this is also taxable 9% and 9%. We will see on that also. Next, healthcare services. Healthcare services by clinical establishment, by his clinical establishment, by his clinical establishment. One second, guys. One second. Yes. So by his clinical establishment. So here regarding providing the rooms having room charge of 3,100 per day to a person receiving the health services. So 5,000 exemption is there for us. Okay, so this is exempt under GST. Next one, service of a guest house for lodging purpose having value of supply of a unit accommodation 800 per day. The lodging services, there is no exemption here. Earlier there was 1,000 rupees up to 1,000 rupees. It was like exempt, but now it is taxable no matter how much it is, except when the section 12A entity is providing. So here you be careful. So this is taxable again 9% and 9% you charge tax. So with that, that is what the concept. Simple. Next, please understand when you are writing the answer in the exam, this you should be careful. Correct provision of law should form part of your answer. So writing the provision detailedly clearly is again very important for you. So please be careful when you are writing the answer. Okay, fine. Next, let us move on to the next one. Mehta and Mehta, registered supplier of taxable goods located in Bengaluru, Karnataka. That is important for us. Mehta, Karnataka. Purchased one machine, 12,39,000, including IGST from one supplier of Maharashtra who issued invoice on the same date. Okay. Mehta and Mehta received the machinery on the same day and availed ITC. Okay. Next, Mehta and Mehta used the machine in the process of manufacturing of taxable goods. However, Mehta and Mehta sold this machine to Mr. Anand Rathore of Andhra Pradesh on 20th August next year for 7,50,000. With reference to 18 subsection 6, you have to determine the amount payable, if any, at the time of sale of the machine. 18 subsection 6 says the total ITC availed minus 5% per quarter or transaction value into GST rate, whichever is higher. That one they have to pay. Correct? That we have to understand. So now, if you see, so first we should take ITC availed. What is the ITC availed? 12,39,000 is including GST. What is the GST rate, Mahi? 18%. So here let us take 18 divided by 118 if you see. 12,39,000 into 18 divided by 118. 1,89,000. Sir, 1,89,000 minus how many quarters they have used? How many quarters they have used? On 25th August they have purchased. So now the sale is happening on 20th August next financial year. So in that financial year, July, August, September, Q2. So in that financial year, they have used Q2, Q3, Q4, and this happening in Q1, Q2 of the next financial year. So total 5 quarters they have used. Okay. So that means minus 25% if you see. 1,89,000 minus 25%. 1,41,750 rupees. Or how much they have to pay? Sir, the sale price 7,50,000 into 18%. So 7,50,000 into 18% is 1,35,000. So which one? How much they have to pay? What is the amount of reversal as per 18 subsection 6? 1,41,750 is the amount of reversal which they have to do. Okay, so that is what the point, right? So that is question number 2. Next, let us move on to the next question in that from customs duty. Actually, this is so now in this question, if you see the product PKY was imported by Mr. Surya by air. That is important here, as you know. While calculating the customs duties or transportation by air or vessel, all these things you should be very careful. Okay, so by air it is fine. Now the details of import transaction are as below. Price of PKY at exporter's factory 8,500 US dollars. Freight from factory to exporter to load at the airport in the airport is $250. Loading and handling charges at load airport, that means exporter's country only, it is again $250. Next, freight from load airport to the airport of importation in India. So freight is $4,500. Insurance is $2,000. Now they have given the information offer. Aircraft arrived on 22nd Jan. Bill of entry is filed on 20th Jan. They gave the customs duty rate on 2 dates and exchange rate by CBAC, RBI, all these things. IGST levy bill, all these things they have given. Okay. Now, please understand. Please understand. Sir, here, exchange rate will always take off CBAC on the date of filing bill of entry. Bill of entry filing date is 20th Jan. And customs duty we will take entry inverse or bill of entry, whichever is later. Which is later, 22nd Jan is later. So we'll take basic customs duty rate 10%. Next, same way, IGST also will take rate 12%. Okay, that is what the point here. Fine. Now, here one interesting point actually, what we have to focus is, please be very careful with this problem. Sir, first thing, we have to calculate FOB value, correct? FOB value means, sir, that 8,500 plus 250 plus 250 totally till you bring it on board in the exportation country. So that is $9,000, $9,000. And for that you should have added freight. Freight, when you are importing by air, it cannot be more than 20% of the FOB value. 20% of FOB value is 1,800. But here the twist in the story is when you take 20% of the FOB, sir, you should take that as now 20% whenever you take. It means it is freight per from the factory gate of the exporter till the place of importation. Please understand that is very important here. So it is till the place of importation. That is very important. So for that, whatever freight has incurred, that will be taken as 20%. That means that whatever 250 you have incurred, the $250, $250, it is deemed to be present in this itself, $1,800 itself. I'm sorry, guys, some like I'm worried about the audio actually. That's all. So hope it is clear, actually audible. Right. Now, so 1,800 is the amount. So in the when you take 20% of FOB as freight, that means it is nothing but the freight from the factory gate till the place of importation of the importer. That is what taken. So here again, already $500 is included in this character. So now what we will do? We will reduce. We will reduce that $500. Okay. So that is what the point. $500. Now again, sir, there is insurance. Hope you have clarity on this, guys. So please be clear when you are taking 20% of the FOB as freight, 20% of FOB as the freight, then you should not take again the expenses of what from the exporters factory gate to again this exporters port, their loading, unloading, all these things deemed to be included in that only. Okay. So insurance is $2,000. Okay. So total how many dollars? Sir, 9,000 plus 1,800 plus 2,000 minus 500. So $12,300. 12,300 US dollars. Now for 12,300 US dollars, what is the conversion rate you are going to do into rupees 70? We have already decided into 70. So 8,61,000. And on that we will charge basic customs duty 10%, correct? That is what the rate we have seen. The 10% means 86,100. Again plus 10% social welfare surcharge. Basic customs duty is on value. Social welfare surcharge is on basic customs duty. So 8,016 rupees. Now what is the total? 8,61,000 plus 86,100 plus 8,610. So total 955,710. 9,55,710 rupees. Now this is the value per IGST. So now plus IGST at 12%. 12% on 9,55,710. Hope you are clear with that. So it will be 1,14,685.2. Okay. So this is what the point. Now total taxes payable is what? Total taxes, basic customs duty, social welfare surcharge, and IGST. Okay. So this 1,14,685.2 plus 86,100 plus 8,610. Total 209,395. 209,395.2. So if you round up, it will be 395. That will be the answer. Okay. So that is the answer for this particular problem. Hope it is clear. So we are done with question number 2. Let us move on to question number 3. So right now, if you see the next question, question number 3, sir, KMP Company Limited here, what they are doing? KMP Company Limited is registered in Bengaluru. Okay, so this is a private company and Bengaluru, Karnataka, and they are manufacturing the goods, and they are talking about April month here. So they're just asking about what ITC can you avail here. You can claim here, as you know, obviously. So what is the ITC available here for this April month is what the question. And life insurance premium paid by company for life insurance of factory employees as per the policy of the company, no legal obligation. You know that if there is statutory obligation and if you pay the premium on that whatever the GST you are paying, you can take ITC. Company policy, yes, you cannot take ITC. So it should be a legal obligation. That is what important here. So there is no legal obligation here, so you cannot take ITC. And please be careful here. The outer column is GST paid, not the amount. On that again, you should not charge 18% of that. Raw materials purchased, invoice is missing, but delivery challan is available. Invoice should be present, so ITC again not available. Next, raw materials purchased which are used for zero rated supply. Sir, used for zero rated supply, happily you can take ITC. Okay. Next, works contract service used for repair of factory debited to P&L. That means it is not capitalized, so you can take ITC again. Guys, understand while writing the answer, you should give the explanation properly in the answer. You should not just write like that. Yes, can take ITC, cannot take ITC. Next, company purchased capital goods 4 lakh and 44,800. They have claimed depreciation, that is 10% on 4 lakh 48,000. That means including GST, they have taken depreciation. That means on GST component, you know, GST component either you take ITC or you should claim depreciation. Both are not possible. So here you are claiming depreciation, correct? So that means ITC is not allowed to. Okay, that is the answer. And they have given some other information also here. That is, so in the month of September of the previous financial year, KMP Company Limited availed ITC 2 lakh 40,000 on purchase of raw material, which was directly sent to the job worker premises on 25th September on a challan previous financial year. Okay, the said raw material has not been received back from the job worker up to 30th April of the current financial year. There, you know, when inputs can be directly sent to the location of the job worker and still you can take ITC, provided those inputs are received back by you in 1 year. Here, still 1 year not over, so no need to worry. In this April month, there is no liability going to be added on that. So, no need of any adjustment. You just make sure you are explaining that in the working notes. Simple. Next, all the above inward supplies except serial number 1 and serial number 3 has been used for manufacturing taxable goods. Inward supplies at serial number 3 above has been used in manufacturing exempt goods. Sir, in serial number 3, it is zero rated supply. So, zero rated supply means automatically when you are exporting or supplying to SEZ, you can happily take ITC no matter whether the good is taxable or exempt, it doesn't matter. Please be careful here. I repeat, even though it is exempt supply, sir, once you make an export or once you make a supply to SEZ, it is called as zero rated supply, not an exempt supply. So, you can happily take ITC. So compute the net ITC available for the month of April with the necessary explanations. This is what important here, my dear friends. Next, let us move on to the next one. Subpart B here. Null Neer Private Limited is engaged in business of distribution of construction material. As an incentive, Null Neer Private Limited pays amount of 75,000 to its employees upon achieving the specified sales targets. The incentive is part of salary of the employees and applicable taxes deducted at source as per relevant income tax provisions. Okay. Null Neer Private Limited is of the view that GST is not leviable on such incentive paid to employees. Whether the view taken by Null Neer Private Limited is correct. Of course, the view taken by Null Neer Private Limited is correct because GST is not leviable on the incentives paid to the employees here because that is paid as a part of salary. And salary is Schedule 3 transaction, you know, employee providing services to the employer in the course of employment contract for which he is earning salary is neither supply of good nor supply of service. And they have clearly given it is a part of salary incentive. It is not a gift. Okay, it is not Schedule 1 situation. It is Schedule 3. So, not able to pay GST. Absolutely correct. Next. Mantu Chowdhury imported goods from Germany and finally reassessed under Section 18, subsection 2, two consignments. The particulars are like this. Provisional assessment they did on 12th December. Final reassessment they did 2nd Feb. Duty demand on first consignment is 1,80,000. Refund for second consignment is 4,20,000. Duty of refund made by the department 28th April. Date of payment of duty demanded is 5th Feb. Determine the interest payable and receivable. That is important here. by Mantu Chaudhary on final reassessment of two consignments. Everywhere understand suitable notes should be there. You should have written them. Okay. Now, the provisional assessment has happened, sir, and then final assessment they have done. And in that, there are two consignments. For one consignment, sir, there is a demand that is 1,80,000. On that 1,80,000, you should pay interest. You should pay 1,80,000, correct? You should pay interest, correct amount. And you should pay interest here from what date to what date you should pay? Sir, you should pay interest from the date, first day of the month in which this provisional assessment has happened. That is December, 1st December. Okay. Till which date we have to pay? Till the date of payment. So when you are making the payment, payment is made on 1st February. So December 31 days plus Jan 31 days plus 2 days. 64 days of total how many days? When you are making the payment, payment is 5th Feb. Sorry, I'm seeing 2nd Feb. Okay, sorry. So 3 more days we should add. So total 67 days will come around. 67 days divided by 365 into what is the rate of interest now we have to pay? 15%. So 1,80,000. I repeat, the interest will be calculated from day one, first day of the month in which provisional assessment is done. Provisional assessment is done in 12th December, on 12th December. That means 1st December we have to calculate from 1st December till payment, 5th Feb. So December fully 31 days, Jan full 31 days, total 62 days, plus Feb 5 days. So 67 days we have to take. 1,80,000 into 15% into 67 divided by 365. It is 4956.16, something like that, but this is the amount interest payable. Okay. Now what is the interest receivable? So refund amount is 4,20,000, sir. Refund, see, whatever the refund after the assessment of this, when the assessment has happened 2nd Feb, from that within 3 months, if you don't receive the refund, you can claim the 6% interest, all that you know. So here when the refund was granted 28th April, 2nd Feb means 3rd Feb, sorry, 2nd Feb, no, 3rd Feb, 2nd Feb means 2nd March, April, May. So till 2nd May you have the time, but here the payment is given on 28th April itself. So within 3 months, the refund has been granted. So refund receivable concept on that interest will not come. No interest receivable. Simple. On the refund amount, no interest is receivable. So interest payable is a 4,956, but receivable nothing is there because you got the refund within 3 months from the date of order. That is the final assessment. Okay. So that is what question number 3. Next, let us move on to question number 4. Next, in this question, actually, sir, it is purely regarding ITC set off with output tax payable. Simple. So this is purely regarding set off. They're asking the taxes to be paid for the month of July on the basis of below information given by Mr. Silver and Co. They gave output tax, they gave input tax, they have given also tax payable under reverse charge. You know, generally output tax, what we will do, sir, 14,75,000, 28 lakh 34,000, 28 lakh 34,000. This is the output tax. And now we will reduce input tax. And here they also gave one more point. So output tax reported under IGST column pertains to the month of Feb. That means this is related to Feb month liability. So even though it is Feb month liability, this is an output tax. You can use ITC. No need to worry about that. Also note that input tax credit available in e-credit ledger pertains to input tax purchases made during the month of July. So here if you see now, so ITC you can use for that. And no complication, nothing, no opening balance, all these things. ITC, how much you have? IGST, first thing you should make IGST balance 0. Sir, IGST you have 26,52,000. Sir, 26,52,000 you have, but your liability is only 14,75,000. So if you minus that, 26,52,000 minus 14,75,000 will give you 11,77,000 still will be there in IGST. And IGST has two parties to help you. One is CGST and the other is SGST. Both of them needs the same help, all that, because taxes and liabilities both are same. So let us distribute half of to both of them. The answer will not be different. But you know, when there is a situation like you have IGST ITC balance and you have to help CGST SGST in such a way where your utilization is so effective, your cash payment comes down drastically. Here there is no need of such thinking all that. The question is simple. Yes, both of them has liability, both of them has same ITC, same liability, both of them need same help. So half of you just help them, the answer will remain the same. So 5,88,500, 5,88,500. So this is used from IGST. Now if you see the liability, 0, 28,34,000 minus 588,500 is 22,45,500, 22,45,500. So from that now you can just reduce that CGST, SGST both. So respective amounts. What is the ITC? 18 lakh, 32,000, 18 lakh, 82,000 is there. So if you use them actually now, what will happen? The liability will be like this is 0, 22 lakh, 45,500 minus 18 lakh 32,000 will give you 4 lakh 13,500, 4 lakh 13,500. So this is the tax payable. But sir, there is an RCM liability also. So plus RCM liability. Sir, plus RCM liability, if you see what is RCM liability, 36,000, 1 lakh 44,000, 1 lakh 44,000. So this is total liability payable in cash. 5 lakh 57, 500. 5 lakh 57, 500 is the total amount payable in cash. And they have asked only here the taxes, how much is the taxes payable. They did not ask anything about interest. So actually on this, interest also will come into picture, as per section 50. Okay, so that is what the question, simple one. Okay, so now let us move on to the next question. So the next one, if you see, Manoharan and Sons registered person sends certain category of yarn for processing to the job worker in January. The job worker undertakes the processing on the yarn as per the requirement of Manohar and Sons. During the process, job worker uses his own material also. The processed yarn is sold by Manohar and Sons directly from the job worker premises in the month of March. Balance quantity is sent back to the job worker, is sent by the job worker to Manohar and Sons in April. Okay. The accountant of the job worker is of the opinion that since the job worker is using his own material also in processing, the supply being made by it to Manohar and Sons is in the nature of supply of goods as well as services. Do you agree with the opinion of the accountant? Please go through the theory, answer whatever they have given. Simple. What is that? See, this fellow job worker is doing job work activity. As per schedule 2, any person doing some processing or whatever manufacturing etc on goods belonging to some other person is treated as supply of service. Here Manohar and Sons are sending the goods and this fellow is doing some processing on that, and there is a circular also clarifying that job worker while doing the processing, while providing his services as a job worker, can also use his own goods. Okay, that is what the point. So still it is very much treated as supply of service only. This cannot be treated as both supply of goods as well as services. Read the answer once, more than sufficient. Now let us move on to the next one regarding baggage rules. So in this, if you see, so this fellow is a Richard Wilson, foreign origin, coming on travel visa to India. He carries with him part of baggage, all these things. So travel souvenir, other articles carried on person, travel souvenir not liable for customs. Other articles, yes. 120 sticks of cigarettes, 100 rupees each. Sir, up to 100 sticks you can bring, sir, with normal baggage. But more than that, obviously, more than 100, obviously, will be like not under normal baggage rules, not under this normal 38.5%, it will be straight 100%. So that will not be there. So up to 100 sticks, 10,000, yes, it is normal baggage you can take. Next, firearm with 100 cartridges, uh, where value includes the value of cartridges at 500 per cartridge. That is 1 lakh actually. And normally this firearm cartridges also up to 50 you can take, not more than that. So that 50 cartridges you can accommodate. So here 50 cartridges into per cartridge is 500, so you can accommodate 25,000 in normal way. So as normal baggage, 10,000 as normal baggage, and these things greater than 120 sticks or the firearms and cartridges more than 50, all these things will be chargeable at 100%, not this 38.5%. So that is the point. So determine the custom duty payable. So you will get here 1,50,000 plus 10,000 plus 25,000. Total 185,000 is the amount. On that you can take general free allowance 15,000. You know that. So total it is 1,70,000. On that 38.5% you have to apply. So it is 38.5. 65 450 is the answer. That is what the taxes payable here. Right. Next, let us move on to the next question. Question number 5. So the next question number 5, sir, Kanna Handloom, registered supplier of Madhya Pradesh, filed monthly GST returns for the financial year 24-25. During the scrutiny of its returns for the said financial year 24-25, in August 2025, the proper officer has noticed that inadvertent short payment of CGST, SGST both put together 4,60,000 in the month of October 2024 on the account of a bona fide error that is important here. Before issuance of show cause notice by the proper officer, Kanna Handloom paid tax of 1 lakh, that is 50,000, 50,000 both, okay, on the basis of its own ascertainment along with applicable interest and penalty. Okay, now, if any, penalty, if any. Okay, on 15th September 2025, they have did this and informed to the proper officer. So, informed the proper officer in writing of such payment. Here, ascertain the last date by which the show cause notice can be issued by the proper officer for the amount of tax short paid by Kanna Handloom. So this is regarding the last date of show cause notice. This entire story is all about. You know, sir, section 74A says show cause notice can be issued within 42 months, whether it is like bona fide error or not, all these things. 42 months from the due date of annual return, of the relevant financial year. Relevant financial year is 24-25. Further due date of filing annual return is 31st December 2025. From that, at 42 months, that means literally 3.5 years. So 26, 27, 28. In 29, 6 months. That is 30th June 2029 is the deadline for the show cause notice. Okay, that is what the answer. So if you see the next one, so next question is regarding, sorry, Mr. Cummins, an unregistered person. Cummins, the name which most of the Indians, the cricket fans, will be hating. Of course, Pat Cummins. Okay, not just Cummins. So under GST, he is unregistered. He is purchasing the goods supplied by Mr. Marsh, who is a registered person, without receiving a tax invoice from Mr. Marsh, and thus he is helping the Marsh in tax evasion. Okay. A disciplinary action is brought against Mr. Cummins and an ad hoc penalty of 20,000 is imposed by passing an order without describing the contravention for which penalty is going to be imposed and without mentioning the provisions under which penalty is going to be imposed. Should Mr. Cummins proceed to pay for penalty or challenge the order passed by the department? That is what the point. Obviously, we know when the penalties, all these things are charged, sir, there should be a speaking order, correct? On what grounds the order is passed, all these things should be mentioned. So there is some general discipline procedures mentioned in section 126. Just go through that and understand it. Some theory question, all that. Next, balance questions also straight theory questions, nothing great concept, all that involved. So just make sure, but understand, don't ignore these things. Any RTP, MTP, all these things, MTPs especially, last set of questions, past exam question papers, these are going to be straight, like what? Purely theoretical, all that stuff. So please go through all that questions, like past at least some 10 question papers or 10 MTPs and question papers, whatever it is, to the extent possible, go through such questions. High chances of same questions being repeated, and you may score good marks here also, right? So that is what all about this MTP discussion. Hope you have enjoyed this discussion and share this with your friends who are like preparing for this CA final exams. And I always tell, please make sure you are enjoying your preparation. That is what going to give you the positive results. So enjoy your preparation. Wishing you all the very best. Hope to see you all as my professional colleagues, the chartered accountants. Thank you and Jai Hind.